Hello, listeners. Welcome to the Morning Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 20th, 2026. Let's dive in. We are starting the day with some heavy headwinds in the U.S. markets. Looking at the pre-market numbers, S&P 500 futures are down about 0.2%, and the Dow is under pressure as well. The big story this morning is the shocking fourth quarter GDP data. Analysts were expecting the economy to grow at a 2.5% pace, but the actual number came in at just 1.4%. That is a massive miss. To make matters worse, while growth is slowing, inflation isn't. The core PCE price index, which is the Fed's favorite inflation gauge, is expected to show a 3% year-over-year increase today. Traders are calling this a stagflation scare, where growth stalls but prices keep rising. We're seeing the Nasdaq feel the heat particularly hard, though some AI leaders are trying to hold their ground. Meanwhile, the Russell 2000, which tracks smaller companies, is sensitive to these growth numbers and is looking at a rough opening. Among individual movers, Grail is seeing a massive crash in the pre-market following disappointing cancer test results, while Texas Roadhouse is a rare bright spot, actually climbing after hours despite a tough regular session yesterday. It's a jittery morning on Wall Street as everyone waits for the Supreme Court's potential ruling on the Trump administration's latest tariff proposals.
Thanks, Sarah. Moving north of the border, the Toronto Stock Exchange is caught between two worlds today. On one hand, the TSX is heavily weighted toward energy, and with Brent crude spiking above $70 a barrel due to Middle East tensions, our energy heavyweights are seeing a significant boost. We saw a stellar report from Cenovus Energy this morning. They reported record upstream production, over 917,000 barrels of oil equivalent per day. Their net earnings skyrocketed to nearly 934 million Canadian dollars, up from just 146 million a year ago. However, the broader TSX composite is likely to face the same gravity as the U.S. markets. While the high oil price helps companies like Cenovus and Suncor, it acts as a tax on the rest of the economy, particularly the manufacturing and transport sectors in Ontario and Quebec. We're also keeping an eye on Hudbay Minerals and Newmont, as the rally in gold and silver, which are near record highs, is providing a safety net for the materials sector. For Canadian investors, the theme today is definitely resources as a hedge against the geopolitical uncertainty we're seeing in the Gulf.
Looking across the oceans, it's a fascinating morning for international markets. In Europe, the big news is coming out of London. Britain just recorded its largest budget surplus on record for January, over £30 billion. This was fueled by a surge in capital gains tax receipts. Despite that, the FTSE 100 is trading cautiously. Over in Germany and France, the DAX and CAC 40 are mostly flat to down, as investors weigh the impact of Trump's 10 to 15-day ultimatum to Iran. In Asia, the picture was mixed. The Nikkei in Japan held steady, but all eyes are on the Nifty 50 in India. The Reserve Bank of India recently noted that new trade pacts with the EU and the US are significantly boosting investor sentiment, helping India decouple slightly from the volatility we're seeing in China. Speaking of China, their tech sector is under the microscope as humanoid robots stole the show at the Spring Festival Gala, performing backflips and kung fu. It's a viral moment, but investors are still asking if this AI surge is real tech leadership or just great marketing. In the currency world, the dollar remains king, though the Japanese yen is seeing some safe haven buying as tensions escalate.
Back in the U.S., we have 5 major corporate stories that are moving the needle for the S&P 500 today. First and foremost, the retail reversal. For the first time ever, Amazon has surpassed Walmart in annual revenue. This is a historic shift in the American economic landscape, signaling that the AI-fueled logistics and cloud dominance of Amazon has finally outpaced the brick-and-mortar king. Second, as Sarah mentioned, keep an eye on Grail. The cancer test firm's stock is essentially in free fall this morning after disappointing clinical data. Third, we have Etsy. Despite missing revenue estimates, The stock is actually popping because of their deal for the social shopping app Depop, which investors think will capture the Gen Z market. Fourth, in the tech space, Figma reported a 40% revenue jump. However, analysts are still cautious about how much of their design business might be cannibalized by generative AI in the long run. Finally, the big banks like Bank of America are reporting that U.S. stocks are seeing their lowest share of global fund flows since 2020. It seems the smart money is starting to look for better valuations in international markets or commodities.
And Joe, it's not just the U.S. companies making moves. Internationally, we're seeing some major strategic shifts. Italy's energy giant, Enel, is expected to announce a massive pivot in its business plan next week, shifting its primary investments away from emerging markets to focus almost exclusively on the U.S. and Europe to lock in steady returns. In the mining sector, AngloGold Ashanti posted a profit surge of 160%, riding the wave of record gold prices and paying out a record dividend to shareholders. We're also watching the Sway blockchain. 2 new spot Sway ETFs launched on the Nasdaq and NYSE this week, but early data shows trading volume is surprisingly low. It seems the appetite for new crypto products outside of Bitcoin might be hitting a saturation point. And on the trade front, the US and Indonesia just finalized a $33 billion deal to slash tariffs. This is a major win for Jakarta and could see a significant increase in U.S. goods flowing into Southeast Asia, potentially offsetting some of the friction we're seeing with other trading partners.
Wrapping things up with the big picture, the intersection of economics and geopolitics is getting crowded. President Trump's warning to Iran, giving them a 2-week window for a nuclear deal, has the U.S. military positioning 2 aircraft carriers in the Middle East. This is the primary driver behind the oil spike, and it's making the Fed's job nearly impossible. Speaking of the Fed, keep an eye on a sudden $18.5 billion overnight repo operation. For those who aren't familiar, a repo operation is when the Fed injects cash into the banking system to keep interest rates stable. This sudden spike suggests there might be some liquidity stress behind the scenes. Combine that with a trade deficit that reached $901 billion in 2025, despite all the tariffs, and you can see why the markets are on edge. Investors are beginning to wonder if the higher-for-longer interest rate environment is finally starting to break the gears of the global economy.
So, what are the key takeaways for today, February 20th? First, the U.S. economy is showing signs of a stagflationary pinch, lower growth than expected with persistent inflation. Second, geopolitics is back in the driver's seat. Oil and gold are your primary hedges right now. Third, the retail landscape has a new king as Amazon overtakes Walmart. And finally, watch the liquidity. That Fed repo spike and the Bitcoin struggle near $67,000 suggest that while there's plenty of cash in the system, it's getting very nervous about where to hide.
That wraps up today's update. I hope you gained useful insights into the global markets.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off.